What is up, traders? Welcome back to the channel. This is KOJOFOREX, aka GBP Legend, aka King of Blues. So in today's video, we're going to be talking about 4 main reasons why you keep blowing your Forex trading account. So I get a lot of people coming into my DMs and then telling me, Kojo, I just blew my Forex trading account, but I'm not giving up. I'm going to fund my account and come back in again, and so on and so forth, right? You get one person coming to tell you that they blew the account 3 occasions, 4 occasions, 5 occasions, and then they keep funding and coming back again and blowing and coming back again, right? So I just thought about it. I'm like, okay, it's not really helpful to get people blowing and losing their money and then going and coming back again. So I'm going to do a short video to point out some of the main reasons that surrounds reasons why a lot of people actually blow their Forex trading account, right? So my friends and I have been making fun of people that blow their trading account and be like, the brokers usually will be sitting down watching them and be like, this guy just blew his account, go and come back again, right? And then people just keep going and coming back and going and coming back and blowing their accounts over and over and over again. So we're going to talk about 4 main reasons, right? I'm going to be pointing them out here. 4 main reasons why a lot of people, even beginner and expert level, keep blowing their Forex trading account. So let's go in there, list them, and then talk about each one of them individually. So number 1 reason why a lot of people blow their Forex trading account is edge, right? Edge. Lack of proper edge. Lack of proper edge is one of the reasons why people blow their Forex trading account. Number 2 reason is greed. Right? Number 2 reason why a lot of people blow their Forex trading account is greed. And then number 3 is impatience. Impatience. And then number 4, very important reasons why a lot of people actually blow their Forex trading account is trade management. Trade management. So a lot of people blow their Forex trading account basically revolving around these 4 main reasons: edge, greed, impatience, and then trade management, right? So I'm going to take each one of them briefly and then we talk about them. This video is not supposed to be a long one, so I'm going to do as much as possible to talk about each one of them quickly as possible, then we get down with this video for you. So number 1 is edge. A lot of people, especially beginners, come into the Forex market thinking they can make money and then like live a better life without even understanding that they need to find an edge in the market. What is an edge? An edge is the probability of one thing happening than another. You can only survive in this market when you have got an edge. An edge is when you can be able to be right than wrong, right? Your strike rate is more than average, right? If your strike rate is about 60%, 70%, there's no way you're going to be failing in the market. And then to achieve a strike rate of 60 or 70% or a win rate of 60, 70, 80%, it means that you have to have a strategy that actually works, right? You have to have a solid strategy on the ground that actually makes you win more than lose, right? And then it stems from understanding that you need to learn a lot on the market. You cannot come on the market with basic knowledge and thinking that you're going to be able to flip your $100, $200 account into $2,000, $3,000 over the next couple of months or weeks. You're definitely going to blow it because you do not know what you're doing on the market. I see a lot of people doing some mistakes, like because they do not understand any proper thing or have any proper edge on the market, you get them doing a very funny thing like buying and selling at the same time, which is more like a hedged position, right? And then hopeful or wishful thinking that one should go in the right direction and then they close the other one which is not actually going in the right direction. Another mistake is that you get a lot of people also subscribing to different strategies at different times. Today they are using Ichimoku, the next day they are using stochastic, the next day they are using RSI, just all around like that. When you're doing something like that, it means that you're still finding your feet on the ground. And then if you're doing that, don't get me wrong, you're not wrong, right? You're not totally wrong, but with that mentality, then you do, or with that stage in your trading career, then you do not need to be trading probably even a real account, right? Or even if you're going to be trading a real account, you do not need to be stacking up positions and yearning for profit. You obviously may want to be just trading smaller lot sizes just for learning sake or keeping up with your knowledge sake until you're able to find an edge in the market, right? So number 1 reason, traders, is to find an edge. And then an edge stems from either you're going to go onto the journey by yourself, trying to understand the market, reading books, watching YouTube videos, anything material you get your hands on, until you find that you are able to be right more than wrong, or you understand in depth something about the market movement before you want to go all out to grow your account or take up the challenge in trading, right? So number 1, find an edge. Without an edge, you would keep blowing your trading account, right? Number 2 reason is greed, right? Number 2 main reason why a lot of people also blow their trading account is greed. I've personally blown my trading account because of greed, right? I'm not going to lie about that, right? Where I wanted to flip a $2,000 into $4,000, and then I actually did that, but rather than take all my profit, I wanted to see the market running some more, because like I literally thought I was invisible on the market, right? The market was making me so much money. I was buying GBP USD. I flipped my trading account from 2,000 to 4,000, and then it was a huge spike in the market. So I was actually expecting that with this huge spike, the market was going to quickly retrace some of the moves. So I started shorting with huge lot sizes at the top. So that was me basically doing what we call averaging your losses, right? Where a trade is not going in your direction, but you keep adding positions and expecting that when it drops, you're going to make much more money. So I did that and eventually lost the whole account in a single day. So greed can also be one of the main reasons why you keep blowing your trading account, right? Where you see profit, instead of banking the profit, which is what we are on the market for, you want to see it grow even further more until infinity. And then eventually the market just reverses into your direction, and then you lose everything. So a lot of people have lost a lot of their trading account just basically because of greed, right? I've seen people come to me and say, Kojo, we took this trade, I made a lot of money, but I failed to book some profit, and the market reversed into my direction, or in the opposite direction, and I've totally lost my whole account. Some of them, the market doesn't even get to the point where it's going to take them out, but because of fear and panic of seeing maybe a profit of 2,000 now become a loss of $100, right? Then they start panicking. Not to even cut the losses short, but allow the loss of $100 to keep running, and then it compounds to about 300, 400, 500, and then eventually gets to a point where they cannot take it anymore, and then they literally blow their trading account. So greed is something you have to check, and all these, right? Number 1 is more technical. It has everything to do with strategy, right? The number 1 reason is technical, but the 2, 3, and 4 is psychological, right? So a lot of time you get people saying trading is 10% strategy and then 90% psychological. I do not disagree with them at all, because you need a strong mind to be able to succeed in this game, right? So number 1, edge. Number 2, greed. Number 3, right, a very important point as well, patience, right? A lot of people do not have patience on the market, right? Patience in the sense that it stems from 2 folds. If you are making profits, you are quick to take profit, right? If the trade is going in your direction and the trade has a potential of running 100, 200 pips, you get a lot of people taking profit at 10 pips, 5 pips, 15 pips, right? And then they do not allow the trade to materialize to the possible position it's supposed to. So impatience allows them to take small profit. Now let's go on to the other side. They take frequent losses, right? So someone will set a stop loss of 40 pips and then start taking loss when the trade runs into a drawdown of 20 pips, even 30 pips. You literally set a stop loss to 40 pips, saying that this is where, if the market gets to, it should define you as wrong and then take you out. Respect your stop loss. So my friends and I have been making a joke about respecting your stop loss, not your boss, right? For people that are still in a 9 to 5 looking to get into Forex as a full-time, right? So in trading, you have to make sure you respect your stop loss, right? So once you set a stop loss of 40 pips, unless of course, like I said, you understand technically that you are literally wrong, and then you cut your losses short. So cutting your losses short is also an advantage of actually managing your account, but you have to make sure that once the trade is still playing out and then you have set your stop loss mark level, indicating that this is where, if the market gets, I'm going to be literally wrong. There isn't any point in taking small losses along the way before the market even hits your stop loss. So you get people doing that frequently, and then they continuously keep taking small losses in individual trades, and then at the end of the day they literally lose all their trading account, right? And then for the most part, what happens is that if you take that small loss along the way, the market eventually even reverses back into your direction and be like, oh, if I had waited a bit, I would have made some money, and then I literally lost this account because I took my loss quickly when I didn't even allow the trade to play out. So impatience is one of the reasons why a lot of people also blow their trading account. So make sure that if you want to psych yourself up into not blowing your trading account, respect your stop loss, right? And allow the trade to play out, right? It all has to do with what? Impatience, right? If you accept that you have impatience, and then you start to treat your trading account more professionally, or you start to psych yourself up in the sense of accepting what it is to be a trader, then you start having a lot more patience and allowing your trades to play out. Just literally set your entry point, set your stop loss, set your anticipated take profit, let the trade play out, right? You can close your laptop, close your phone, stay away from the market for a while, come back later and check how things are going, right? Rather than just being stuck on the PC and watching every tick and thing. It's going to affect your psychology and going to start making decisions that are not worth taking. And then number four, another important reasons why a lot of people actually blow their trading accounts is trade management, right? I see a lot of people, especially beginners, with incredibly poor trade management skills. I don't blame them, because obviously some people do not receive proper knowledge before endeavoring into the forex market. Trade management has to do with how you treat your trade along the line as it's playing out, right? So for the most part, I get a lot of people actually take positions, the trade runs into substantial profit, but they do not even protect the trade, right? Protecting your trade is actually moving your stop loss from that stop loss level into a little bit into profit. You can actually do that. I realize that most beginners don't even know how to do that. So if you don't know how to do that, look out on YouTube on videos on how to protect your trade, right? Or how to put stop loss at break even, right? Putting stop loss at break even basically means that removing the stop loss from that initial stop loss level and put it in a little bit in front of the entry price. Do you get it? Whether you're buying or you're selling. That way, when the trade reverses against you, you do not lose any money, and then you may end up finding a re-entry onto the market. So never watch a trade run into 20 pips, 30 pips without protecting yourself, and then watching it literally reverse back on you and then taking you out. Remember that 20 pips and 30 pips is a substantial pip for day traders and scalpers. So as a swing trader or whatever trading style you have, if you're able to watch a trade run into 20, 30 pips and literally reverse back and take you out, and then eventually go all the way down to hit at your stop loss, then that is a poor trade management skills, right? Number two, right, is also trade management also has to do with learning to take partial profit, right? So again, a lot of people also getting literally confused about when to take profit on the market. If you are a swing trader, literally you must know that your trades are going to be running for 1 day, 2 days, 3 days, sometimes even weeks, right? So the best way to save yourself from psychological hurdle is learning to take partial profit along the line when a trade hits any major level in the market. It stems back from understanding technical analysis anyway, because if I am trading and then I have plotted my levels and then the trade hits a particular marginal level, which could be maybe a previous support or previous resistance, after I'm in a substantial profit, I make sure to take partial profit out of my position. So if I have one lot on, I can literally decide to take 0.5 out of the position and allow the rest of the 0.5 position to keep running, right? That way I understand that I have taken some partial profit on the market. So even at this key level, if this market decides to literally reverse or there is a sudden drop, right, I am not going to feel bad about the fact that I watched the market run all the way in profit and then it literally brought me back into a loss. So trade management, if you do not manage your trades properly, it's going to start affecting you psychologically. Understanding that, okay, you're going to always leave money on the table. You saw money, you didn't take it, but you're going to see losses and then be taking it. At the end of the day, your trading account keeps dropping and dropping and dropping and dropping. And before you realize, you're literally at a point where you cannot have confidence in your trading skills again, your trading account again, and then you give up on your trading account. So a lot of people actually end up giving up on their trading account, not wanting to trade it again, and then just or trying to fight back for their initial balance, right? They have maybe a $500 with all these things I've listed here. They lose the money up to half of it, and then now they're trying to like struggle back and trade it back up, even up to the initial, and then they start to stack confidence in any single position they see, going all out, and then eventually blowing all the trading account, right? So if you fall in any of these categories as a beginner, and then one of these reasons has been one of the reasons why you've blown your trading account, you need to write them down, reanalyze them, speak to yourself, and then see how you can be able to help yourself. You can speak to a professional, you can speak to an expert, right? I'm always open. If you speak to me, I have skills and then way of talking to beginners, right? And then some pointers that will allow you to be able to help yourself out of these bad trading habits, so that you do not end up blowing your trading account again. So yeah guys, so if you like this video, obviously you need to smash the like button so that the YouTube algorithm picks it up and then it does well. Also make sure to follow me on all social media. The handle is just KOJOFOREX, KOJOFOREX, on Instagram, Facebook and Twitter. Also make sure to click in the link in the description to join the KOJOFOREX Telegram channel. It's been a little bit quiet these few weeks because the market is still not really active, but once the market picks up, definitely you guys know that I'm going to be dropping more and more banging sniper trades for you to make a lot more money. Also make sure to click on the subscribe button. We are almost hitting the 10k mark that we set for ourselves before the year ends, and then it's been an incredible journey. I am so grateful for you guys supporting the journey, and then there's so much things, like I said, I'm going to be sharing with you in the coming weeks and then years ahead. So yeah, if you like this video, obviously like, click, share, comment, whatever it is, and then yeah, I'll get back to you guys in the comment section as well. So as you know it always, I'm going to sign out now, and then peace out.